Good morning, everybody. Welcome back to another live stream and a new week in the markets. Good morning. Hope everyone is doing well. Hello in the chat. Thank you for being here. And hope you guys had a nice weekend. I did. And yesterday was actually my birthday. So, you know what I did this weekend? We did a lot of not a lot, which was amazing. We went to a comedy show with my parents. We're doing like a birthday celebration next weekend where we're having everybody come over. So uh, feeling very loved and blessed. So thank you to everyone who has already sent me all the very lovely messages. Thank you guys. Okay, so let's see. We've got some interesting stuff to talk about. We've got some changes in scoring within the Edge Finder that I wanted to share with you guys. NASDAQ is out of the gate green here again. Love to see it. We look good there. S&P 500 continuing to march higher. We have the Dow Jones, the Russell. Take a look at Russell, man. Russell looks really strong. Thank you, guys. Wow. Happy 50th. Yep, actually 65th. So 15 years ago, I turned 50, but, you know. The Russell, yeah, look at this. So small cap stocks obviously rallying on the idea that rate cuts are coming, that, you know, things are going to shape up for the small caps because, you know, you have a pro-growth administration, all that good stuff. I think you've got to get above here. If you can get a technical breakout through these highs, that looks really good. U.S. stock market opens up in 30 minutes. We'll see if there's some, if it comes with some steam, if we can get through these highs. This is pretty critical zone of resistance here. If you can get this kind of move, right? If you get this sort of breakout follow through kind of move, that would be really interesting. So the Russell looks really strong. I don't have any long exposure to the Russell at this time, but I like it quite a bit. So if we were to get this this move here, if we were to get a solid breakout above this prior, by the way, this is an all-time high. So if we got to break through the all-time high, pull back into this area looks really good. I'd be interested in long continuations on the Russell. Let's see. I'm going to pull up my top setups page because I haven't looked at it this morning. So we've got gold back on the watch list. Love to see that. Oil is interesting too. I want to look at that. The Russell, which we just got done discussing, this one is top of mind for me. Bitcoin, I want to talk about Bitcoin. We've got a lot of stuff to do here. Euro dollar, Euro yen, Aussie dollar, Dow Jones. My goodness, we have a lot of stuff. We've also got to look at institutional positioning because we had some new COT data hit the wire here. So we'll take a look at that. And people keep constantly saying on my comment section, yeah, but it's delayed. I get it. It's always kind of delayed, but it's still useful information to look at. So we'll look at that in just a minute. Look at that. Russell's up 0.7%. Not too shabby here. Yeah, so I'm looking for breakouts on this one. And this one I think actually tested did it test the 200-day moving average? No, it didn't quite test the 200. Tested the 100. Broke through it and then shot right back up, which looks really strong. Russell has recaptured all of our major moving averages, which is nice and looking solid here for now. Dow Jones also looks really good. Take a look at this. Moving average is perfectly aligned. And this is just not a market that I think you want to fight. I know I keep saying that, but I keep getting so many comments from people who are so bearish on the market. And it makes, you know, it really makes you wonder, how is it that follow the trend? Like the first thing you learn when you get into trading is the trend is your friend, right? You everywhere you look, identify the trend, trade with the trend is your friend. And yet everywhere you look, people go against that mantra. They refuse to trade with the trend. It's fascinating. It's very observable in currencies. I've talked about this for years. If we go to our retail sentiment here, let me show you this. Thank you guys very much for the happy birthdays. Thank you very much. I appreciate it. So if I just look at major currencies, let me show you something. So currencies are just so notorious for this. Currency traders tend to just love to fight the trend. And I'll show you because let's look at euro dollar. Euro dollar has 70% of crowd sentiment is bearish. Also, I'm just curious, comment really quick, drop a message in the chat for me. What do you guys trade primarily? Are you a gold trader, silver trader, NASDAQ, S&P, Dow Jones, euro dollar, dollar crosses? Give me some feedback. I'm just curious who's in the room right now. Do we have Forex traders? Do we have gold traders? I'll try and cater my analysis a little bit more in your direction. So if we take a look at euro dollar, going off this idea, right? Euro dollar has started to make a move higher. Look at it on like the 4-hour time frame, right? So you've had this move higher. And what we can see here is immediately crowd sentiment drastically has gone in favor of getting short the euro, right? So crowd sentiment, bearish. The contrarian signal tab here, what that's showing you is it's showing you what the edge finder produces. So if you get over 60%, that's our threshold internally in the system. If you get over 60% one way, the edge finder flashes a contrarian signal. Okay. We got lots of gold traders, Forex traders, trade what's in play, indices, NAS. We got a little bit of everybody. Good. You're in the right place. We don't really focus on one on this channel. We focus on what is moving the markets, and macro traders, you know real well, no such thing as only trading one. If you trade Forex, you also trade indices. If you trade indices, you also trade gold. If you trade gold, you also trade Forex. It's all connected. If you think it's not, what you got to do is pull up a window like this. If you think that they're just all isolated and none of them are the same, pull up this window, right? And then sit there and watch an NFP day. And you tell me that they're all not moving based on the data that's dropping, right? They are. All markets are connected in some capacity. If you're a macro trader, you lean in and embrace that. Macro traders, this is the coolest thing, right? It's one of the coolest things about being a macro trader. When you trade fundamentals, macro, etc., you may never trade the Russell 2000 index, but you can get a lot of cues and signals from just looking at the performance of the Russell. If you never trade gold or Bitcoin, it doesn't matter if you trade them or not. If you're a macro trader, all of these things are giving you cues and signals. You know what I'm saying? If you are a macro trader, the beauty of it is you trade everything because oil tells you a story. Bitcoin tells you a story. NASDAQ tells you a story. The dollar, the yen. Get this out of your head that, oh, I only trade gold. I only trade euro. No, you don't. Unless you are just a pure technicals trader, which is, fine if you are. But if you're a macro trader, start accepting that you trade everything. Everything is connected. All of it. Gold, UJ, Bitcoin, silver, oil, VIX. It's one big story. These are all characters within a story. Okay. That's how you start understanding how macro moves the market. It's a big story. And all of these charts that we watch, they're all just characters in that story. By the way, you know what else I did this weekend for my birthday? James, you're going to love this. James is the producer. I played a lot of Skyrim and it was so fun. I've never really gotten into Skyrim, but my wife and I, we sat there with our 2 cats and we played Skyrim and it was so much fun. I'm such a noob though. It's like really embarrassing. I had to restart my campaign because I got lost, but also I was getting killed over and over. Like every fight I was losing. I'm like, what am I doing wrong? So I started over and decided to go slower rather than just run into some random fortresses. I don't know. Anyways, it was really fun. Skyrim was fun, and I'm going to keep playing it. But yes, back to our concept. If you're a macro trader, you trade everything. I also wanted to just mention that if you're not in our Telegram channel, join us in there. It's a free way to start learning it. So we put together a ton of free education around macro. So if you're somebody who's like, okay, I get it. Macro is cool and important. And I hear that you're saying all this stuff tells a story, but I have no idea where to start. Here's how you can start right now for free, like genuinely for free. You can never spend a dime and you can learn what courses will sell you for $1,000. Okay. Join our Telegram channel. We'll drop the link here in the chat. We're breaking things down on what's happening with the Australian dollar and why you could spend. I'm telling you what, I'm a big advocate of if you're going to learn something, do a little bit every single day. The guy who or the girl who spends 15 minutes a day studying this stuff for 5 years is going to make it so much further than the person who tries to spend 10 hours a day staring at charts. I'm telling you, that person will burn out. But the guy or girl who joins our Telegram and reads along every day, 5 minutes a day, 10 minutes a day, read along, learn something. It'll be a game changer for you. You can scan the QR code to join our Telegram channel. If you have the Telegram app on your phone, that's really easy to do. It takes 2 seconds. Or we'll drop the link here in the chat if you want to just click that and join us in Telegram. Again, it is a way to learn 100% for free. Okay. Let me just drop the link here. Telegram. There we go. Here's the link. I'm telling you, 10 minutes a day. Take me up on this. I'm telling you, I promise you, I will promise you something right now. If you spend 10 minutes a day reading along in our Telegram channel, in 1 month from now, your understanding of fundamentals will be game changer from where it is today. It's free to join. Click the link, join our Telegram, scan the QR code, all that good stuff, and start learning for free. 10 minutes a day. Okay, so is it in the Discord? Yes, it is. It is also in the Discord. If that is preferable to you, you can also keep up with our analysis. We share it in both places, or our newsletters or whatever. We have all these different places you can read along with our analysis. It's free to watch, learn, and read, etc. Okay, so let's keep going. Let's take a look at some more markets. So I'm long gold. I'm also long NAS. I'm short pound dollar, which has not been as good of a trade, but gold still looks constructive. Gold is like really boring right now. So when it comes to gold, I'm still long. I like the upside for gold. I think rate cuts are coming. I think, overall, I like the idea of staying long, especially with the new Fed chair, who I actually think there's a dual-sided kind of bullish tone to this. On one hand, he's going to cut interest rates, and that's just, that's bullish for gold, more fiat currency getting printed. On the other hand, he's going to cut interest rates and the bond market might disagree with it if he goes too fast, right? Kevin Hassett is the proposed, probably the new Fed chair. That seems to be the likely scenario, the likely Trump administration selection seems to be Kevin Hassett. So he's going to cut rates as much as he can. Okay, what I mean by that is that the bond market may disagree with that decision. If he cuts interest rates too fast, the bond market might say, not so fast, and actually interest rates could go up. You say, what? And what are you talking about? Fed cuts rates and the rates go up? It's possible. It happened. It happened last year. Last year around this time, guys. Understand that the Fed cut interest rates right there. I'm not kidding. This is the 10-year yield. The Fed cut rates right there, and interest rates, yields went up. Why? Because the bond market said, okay, well, you're cutting interest rates in the short end of the curve, but we don't trust this decision to cut interest rates. We think inflation is still going to be a problem. That's what the bond market said. Now, I know this is confusing because you're like, wait, Fed cut rates and then the rates went up? How does that make any sense? The Fed cuts the short end. They cut the overnight borrowing rate. So that's the rate that banks borrow at. They borrow from the Fed, et cetera. They, or they lend to the Fed, right? So the point is the short end of the curve right? Lending for short periods of time, that's controlled by the Fed. The long end of the curve is controlled by the market. The market controls that. Mortgage rates, right? Those are long-term borrowing. So if you go buy a house, you typically in the US, you take on a loan for a 30-year fixed rate, and that rate is not set by the Fed. That rate is set by the market. And so what's interesting is that actually the 30-year yield has actually been moving up, right? That's going to be your mortgage rate. So 10-year yield also has been recently moving higher. Someone had a great question about this inside of our Discord channel today. They said, how's the dollar making this move here to the downside, yet yields are moving higher? Well, it's an interesting dynamic because you have the 10-year yield moving higher. And I think part of the reason for this is that people on the longer term, they think, okay, if the Fed cuts rates too quickly, it could lead to inflation. High inflation means keep those interest rates elevated. We're not going to take, remember, if you're buying a bond, and I know I'm going deep in the bond market right now, if you're buying bonds, you are constantly thinking about, well, what is inflation going to do to my return? If the bond market gives you 4%, but then you lose 3.5% of it to inflation, what the bond market will do in response is say, okay, no, we need more yield. We need 4.5% because we expect 3.5% inflation, right? It matters quite a bit what inflation is expected to be. And so if the Fed's cutting interest rates aggressively next year with the new Fed chair, it is possible that interest rates actually go up. So I think that if Kevin Hassett is smart, he's going to be juggling between the Trump administration saying, cut the rates, and then the bond market saying, don't you dare cut the rates. That's what I think is probably coming in 2026. What that means, in my view, straight up bullish for stocks. Bullish. Why? Why is that bullish for stocks? Well, they want to cut rates, so they're probably going to cut rates. But they're probably going to do so at a speed, I should say, that is okay to the bond market and okay to the administration. That's the only logical thing. If the Trump administration had it their way, they'd probably just cut the rates to 1% tomorrow. But the Fed chair knows the bond market will throw a fit. If you just cut interest rates massively all of a sudden, they will say, we do not trust this. Inflation's going to skyrocket, etc. All of this to say, I think this is a bull case for gold, because that worrisome, that uncertainty around like, can we trust the Fed? They're going to cut rates too quickly, yada, yada, yada. They're going to print us into oblivion. Gold looks strong for 2026. I remain bullish. I think the Fed rate cut chair, the rate cuts plus the change in Fed chair, I think is a generally a more bullish setup for gold going into 2026. Edgefinder also has a strong reading on gold, which I like. Sentiment readings, positive. Technicals look good. Fundamentals look mixed here at this time. Why are fundamentals mixed? Well, let's go look closer. Somebody asked me yesterday, sent me a DM on Instagram. They said, Nick, I'm worried about Edgefinder because I don't know that it's like beginner friendly enough, which is a fair concern, right? People who think about purchasing our products, I love when people send us questions because our goal is to obviously help you understand the tool, ideally before you purchase the tool. Although we do have tons of course material for people who, if you buy Edgefinder, et cetera, there's tons of material to learn in depth. But the goal is and always has been with Edgefinder to simplify things, not make them more complicated. So we look at a bunch of stuff that is really important to markets: technical readings, market momentum, institutional activity, market sentiment, inflation signals, jobs market signals, economic growth signals. But our goal with the Edgefinder is not to overwhelm you. It's to take this very important data that moves markets and determines directional trends and dumb it down in a really cut to the chase way to a point that it's easy to read. I mean, I'm doing this for myself. I know how this stuff generally works through years of study, but I want it to be so simple that within 30 seconds, I can get a snapshot of what fundamentals are telling me about a particular market. So when I look at gold, economic growth metrics look a little bit mixed. GDP came in better than expected. That's bearish for gold. Manufacturing PMIs came in weak. That's good for gold. Remember, gold likes chaos and economic downturn and more rate cuts and weaker dollar. So weak economic data equals good for gold. ISM services PMIs came in strong. That's bearish for gold, right? What you're doing here, this is line by line. It's showing you how Edgefinder is scoring this stuff. Retail sales versus forecast, the outcome was bullish for gold. Why? Because retail sales came in soft, weaker than expected. Jobs market, a little bit mixed, right? Unemployment change was good, which is bearish for gold. Unemployment rate went up. That's bullish for gold. That's, weaker jobs data, good for gold. See, we're just going through this. The point of the Edgefinder is to make this simple. Inflation signals, if we go line by line, CPI year over year was bullish, came in soft, right? Lower than expected, means more likely to cut interest rates. PPI came in as expected. PCE came in. What did PCE come in? I got to look at that again. So if I go over to, where are we going? We're going economic heat map, US economic heat map, PCE numbers. PCE numbers came in lower than anticipated. That should actually be bullish for gold. I got to check on that. Hold on. I'm writing into my notes. Gold PCE reading. So what you can see here, guys, PCE year over year came in lower than expected. That should actually be bearish for dollar, correct, and bullish for gold. So if I go take a look at PCE on this, see there's an error I just picked up on. We're on gold. We're looking at inflation readings. PCE came in better than expected, lower than expected, which is bullish for gold. This should say bullish. So by the end of the day, we will have that sorted. Apologies on that. Interest rates, bearish for gold. Why? We talked about it. Yields have been rising again. Yields are rising. Momentum here recently, moving back up. We're starting to see an uptrend in yields. That's a headwind for gold. That's not so positive for gold. Gold wants lower interest rates always. Always, 100% of the time, gold loves a good interest rate cut on economic slowdown. That's where gold really, truly shines. See what I did there? I did have a good weekend. Hope you did as well. Hope everyone here. Shout out to my regulars. Thank you for being here as always. Sometimes I think about it. I had a long time ago, there was a guy I watched almost every day. This was before I was really doing a lot of YouTube stuff. And I loved his daily live streams. He no longer does. His name's Rob Booker. He no longer does, as much content stuff. He's pseudo-retired, semi-retired. But I know how impactful that was to my trading journey. Having somebody I could kind of walk into their stream every day, learn something, and feel like I picked something up every time I went to the show. And my goal, my hope is that within my channel, if you come to the show every day, I really appreciate your support. And also I really hope that every day you're picking up something. I hope something is clicking, something is making more sense. That is my ultimate, kind of goal with these shows, is to make them educational, but also, let's do it in real time. We're not just talking about historical data and past examples, but rather let's look at the markets today and make sense of them. So was he your mentor, Nick? No. I mean, kind of, not officially. I learned a lot of stuff from him, but I don't really consider him my mentor because I didn't work one-on-one. Just like I don't consider myself mentors to anyone here. Some people are so they'll say Nick, you're my mentor. Not really. You got to learn yourself. There's no substitute for experience. If my experience and my past mistakes by sharing them, have helped you in some way, that's amazing. But mentorship is more one-on-one. So I don't really do one-on-one teaching. I just share what I'm doing in the markets, why I'm doing it. And hey, if it helps you in your journey, I'm thrilled. But I don't consider myself a teacher or a mentor to anyone. because I really don't, genuinely, truthfully, I really don't have the time to like one-on-one mentor anyone. I'm a busy guy. We run a lot of stuff here at A1. We're building tools, running shows. We're having a lot of fun, but I don't really have the time to do one-on-one mentorship. And I honestly, I think the best one-on-one teacher is yourself, genuinely. Back testing, spend the time researching, come to these shows every day, take down notes. That's your best mentor in the world, is yourself. Hey, Nick, I'm from the Caribbean. Do you say Caribbean or Caribbean? What do you guys think? Caribbean or Caribbean? I say Caribbean because the movies Pirates of the Caribbean. Like everyone seemed to have said it that way. I don't know. Actually, I don't know. Some people might have said Pirates of the Caribbean, but that just sounds odd to me. Nick, yields are rising. Do you think dollar might rally when we get a rate cut? It's possible. It's actually kind of been the theme here in the last few months. You've had after the press conference, Powell comes up, takes the stand, dollar rallies. Powell comes up, takes the stand, dollar rallies. So it's possible that you could get a continued rise in the dollar. Though I think you want to keep an eye on some economic data points. Right now, let's look at Euro. Euro's getting such a solid reading here on Edgefinder. CPI, look at this. Inflation signal is really, really strong. In fact, this is bugged also. I got to fix this because that should be showing blue. CPI, Euro dollar, AI scanner. Edgefinder is a constant project. We're always like this. So what I just did right there, see this should be blue like this is. It's a small thing. It's a minor thing, a cosmetic item, but it will bug me until I get it fixed. Been watching you since 2022. You're awesome. Thank you very much, Ruben. I appreciate that, man. Thank you. I hope it's been helpful in some way. What if we see a peace deal between Russia and Ukraine? Could we see a deeper pullback on gold and silver? Possible. I think the bigger story, though, like gold and silver, they know Ukraine and Russia seem to be moving in the direction of a peace deal. If there was one announced, would there be a downside? Possibly. But I don't think it would be like this. It wouldn't be like this giant, like, oh my gosh, they reached a peace deal. Like there's sort of like rumors floating. What I think is actually driving gold up recently is the Fed chair change. Rate cut policy seems to still be intact. A weaker dollar. I think that's really the stronger case right now than geopolitical stuff. What do you think overall about Forex market in 2026? I'm a trend follower, so I don't make, somebody asked me too, they're like, what are your big predictions for 2026? And I'm like, I really don't make big predictions. I just follow what is here and now. So like right now, Bitcoin, I think has upside if you can break out. Let's talk about that Bitcoin chart. Bitcoin. Yeah. So like if we were to get this kind of move, that looks good, but I don't make big predictions. Like I don't make like, oh, in Bitcoin, I think next year we'll reach 127,000 on the dot, and then it will turn back down and we'll come back to 112,500. I don't do all that stuff because to me, it's just so, we have to look at the market today and determine what's in front of us right now, what trends are present right now, because we don't know what tomorrow holds. And I love the freedom of just being a trend follower because you're not required as a trend follower to make grand, magical predictions about the market. The NASDAQ pulled back to the 100-day moving average, hit a key level of support. Macro fundamentals still support stronger stocks in my personal view, and the data that we have in the Edge Finder, right? If I pull this up really quick, if we look at economic heat map, US economic heat map, under here, stocks impact, go line by line if you want to on your own time if you have Edge Finder. We still have strong enough readings here to support bullishness in stocks. The NFP report came in better than expected. JOLTS job openings came in slightly better than expected. Initial jobless claims came in better than expected last week. PCE was lighter than expected. That's good. Inflation has been trending not necessarily up or down, but has been coming in softer than anticipated across the board. Services PMIs, really strong. GDP, really strong. So as a trend follower, I'm not just talking about price trends, by the way, guys. I'm talking about macro and price trends. I don't make crystal ball predictions. I follow trends. And it's freeing because people who do make big predictions, oh, the stock market's going to crash tomorrow. It's amazing how consistently wrong they actually are. It's so hard to predict what markets are going to do all the time. You know, there's people who can do it, but I don't need to. I make great returns in the markets simply following the macro and price trends, right? I don't need to make predictions because I ride trends. So price pulled back in an uptrend. We were consolidating on the higher time frames, but in the context of a long-term upward trend, I put my stop below where I thought, hey, this would nullify the idea. We almost got stopped out, but then price reversed and stayed the general trend. So what now? Where's it going now, Nick? Well, I don't know with certainty, but I think if the trend continues, a trending market typically does what? Higher highs, higher lows, right? As long as that structure is intact, I will follow that trend. So I don't know, like some people will say like, okay, I'm going to take profits right here, and then I'm going to get back in right here. And then what actually happens? Nothing of that sort, right? The market can just constantly shock you. It could do this move. And you're like, well, shoot, I took profits right here and it's not pulling back. And then you're like, okay, well, I'll get back in. And then it does this move. And it's like, you don't know the perfect trajectory of price or the macro trend. I don't try and predict this stuff. I react to it and follow it. As long as you have something like Edgefinder to track macro fundamentals, and you have something like candlestick patterns, moving averages, simple trend following stuff, that's all I need. Macro plus technical trend following, not just one of them. Fundamentals by themselves, I think you're missing the picture because technicals help me with the entry and exits, when to get out of the trade, when it's gone wrong, when I've clearly been shown that, okay, my idea was wrong. You got to have technicals, but you cannot just look at technicals, in my personal opinion. There's other people who do that perfectly fine, but my trading results are not built on technicals alone. Technicals are just the red light, green light. Directional bias comes from macro. I mentioned this earlier. Last thing here before we send over the show to Ivan FX to talk a little bit more about markets. Before we do that, just a reminder, join our Telegram channel. It's free to do. And if you are looking to learn fundamentals, I mentioned this earlier in the stream, I really mean it. If you could do me a favor, do yourself a favor. If you want to learn macro, I know it's scary at first. You're like, it's so daunting to try and learn all that stuff. That's the stuff that moves markets. Listen to an interview between hedge fund managers, portfolio managers, etc. They're not talking about head and shoulders patterns. They're talking about the macro. They're talking about the Fed. They're talking about businesses, etc. If you want to learn, here's how you can learn for free and quite easily. 10 minutes a day. Go to our Telegram channel. Read along with the research that we're publishing there. It's free to you every single day. Alan from our team is doing a wonderful job putting together these reports each day. We share bonus clips. It's free to learn. Join the Telegram. Scan the QR code below my camera or click the link that's just been dropped in the chat. Join us there 10 minutes a day. Do it. You're 30 days from now, if you do that every day for 30 days, your understanding of macro will skyrocket. I promise you. All right, guys. Up next, Ivan FX. Stay tuned. He's coming in just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
What has changed since last time, and was frankly quite literally changed, has been the CAD strength coming in. And I was looking at it on Friday, and I saw the great labor report, and I thought, that's not great. So yeah, it hit my stop loss. But we hit target a bit earlier. But my honest opinion was that we were going to go higher. The CAD was going to weaken, and then they came out with quite strong labor data. The other thing that has changed, I don't know if it's since last time per se, but that has changed, is that also New Zealand has started to become strong. And then at the same time, Aussie has become strong. So what do they have three in common? They have gone from, at least the market has gone from pricing in rate cuts to saying, okay, they're actually probably going to hold, to rate hikes. Aussie, I saw state analysis for a few minutes ago that for RBA for tomorrow, that market is starting to price in rate hikes for next year. So that's not fun, isn't it? So to me, yeah, makes sense why Aussie is so strong, why CAD is so strong, and how did we pick that up? Did we see that somewhere? It was in the it was all in the what do you call it in English? It was all in the inflation data, unfortunately. So all in all, great day, fantastic. Was I a part of it? No, I wasn't a part of it. So that kind of annoys me. And I got a question earlier from Max and saying, "How is your December going, Ivan?" Fantastic. So for now, so I don't know if Nick went through this or anything, but for me, when I run through this and I'll look at all the potential, for that matter, the surprise heat map, for that matter, we are returning, and I think this one is supposed to turn bullish soon. But Aussie stronger, New Zealand stronger. If you go into the heat map, they're all turning. They have been quite weak, but they're all turning into what can I call it? A lot more bullish territory. So for me, it is, well, it's late to start thinking about what happens or what's going on now, but yeah, tomorrow. It's a bit late to start thinking about what is currently happening on the yen right now, but what is important to start think about is, well, maybe not that one, but if you take CAD yen, for that matter, it is starting a trend, and we are likely to continue a trend. Now, where are you going to take this bullishness from, or where against what pair? Are you going to do it against the dollar, which is relatively weak? Are you going to do it against the yen? Are you going to do it against Swissy? Are you going to do it against pound? or euro or New Zealand. In my view, and in my simple view, as I always say to you, find something that's strong against something weak. So if Australia, if New Zealand, New Zealand and Canada are strong together, I can't trade them together. And I'm just saying, what if Japan doesn't rate cut as they're expected to do? If America now comes in and says, well, we are going to have a bullish rate cut on Wednesday, but you know what? We are going to have very weak data 16th of December. That's going to weaken the dollar a lot. So that's a fantastic news, isn't it? So going forward, at least for me, I said I expected risk on for December, and well, we kind of got it. So why not? What are you looking for? Easy peasy lemon squeezy. It's practically just okay. Can I get a pullback on New Zealand that is at least favorable? As you can see, when it falls, there is a lot of patience going into it, and right now we are at a very high place. So for me, it's not really that great. Okay, what about Australian dollar, US dollar? It has really taken off in November, December. Come up to a high. The question is, are we going to continue? Are we going to have a much deeper and a much higher highs? Are we going back up to the 2024 higher highs? And the answer is practically we can. And that lays in that depends that inflation is going to continue rising in Australia. Now, that is a step-by-step type situation. On the other side, you need dollar weakness going forward. Do you have dollar weakness at the moment? And my answer to that is no, you don't. And the inflation is elevated. The GDP is coming in quite strong. Labor market is quite weak, and I'm expecting them to come in quite weak 16th of December. That is a divided economy. Do I want to bet on either one sending this one higher? Yeah, okay, maybe. So they're all the dollars, all the Swissies, all the dollars, all the yens, all the Swissies against the Australian, the New Zealand, and the Canadian are a good set of opportunities. It's just that not just that, but for me, they're quite high. And if I were to think about something, it should have been that I should have bought 20th of November and been like, that sounds like fun, isn't it? Now, for Switzerland, we are going to have a central bank meeting on Thursday. They have 0% inflation, they have 0% interest rate. And Swiss has been very strong because there is no more rate cut to do. My question going forward, are we going to continue this strength, or are we finally getting some weakness? Is this the Australian, is this Canadian, is this New Zealand now going to defy this Swiss's strength? And also Swiss strength comes out of the weakness in the world economy, the risk that comes from America. So it becomes like accumulation of, you just buy Swiss. That is definitely a risk to this trade. So I'm saying a lot of words. Practical saying is, I think longer term, this is going to go higher. Currently, right now, I don't really have an entry. Talk about optimism in the cutting rates. So the thing is that at any given moment, you have what do you expect the rates to be going forward, and for me, I would love I would absolutely adore Switzerland. Can you please start in QE on Thursday? I would beg you on my knees. Right? That's what I want to see. Because then Swiss is going to go absolutely weak. And it's just going to go, just going to fall like a ton of bricks. That is going to be, I don't know how many thousands, how many hundreds, how many pips is going to be out of it. One, the first day, second day, third day, week, month, year, whatever. But that's their next step if they're going to create any inflation. But they have also said at the same time, they're expecting inflation to rise in second quarter of 2026. And we all know how that has gone in the past. Thinking about it's going to do something in 6 months. That is not going to go well because that is way too far into the future, Fed. So that is a directional bias that I have. And Nick talked about the fundamentals is important. That's where you would get your biases from. I'm just explaining where I doing the same process. What do I focus on? Focus on inflation, focus on labor, focus on GDP, focus on PMIs, focusing on the general health. Okay, we are seeing the Aussie Swissy going higher. We're seeing Aussie yen going higher. We're seeing Aussie dollar going higher. Why are they going higher? Because there is improved economic performance in Australia. Second of all, is it going to continue going forward? And my answer is yes, as long as inflation continues to go higher. And then I've basically done my job. And for that matter, it same applies to S&P 500. Is the US economy doing all right? And in my latest economic evaluation of the US economy, is GDP is elevated, CPI is elevated, labor is weak, their PMIs are quite okay. So, and there's no changes, at least significant changes to the banking industry, to the banking system, to the Fed system, to taxes, to regulations, or any other kind of risk factors out there. There isn't really a lot of those. So for me, I'm like saying, okay, cool, thank you very much, sir. We can be looking into AKAs or other things like seasonality or sentiment. Over here at the bottom, I said, I think it's going to go higher. And I went lower. And then I thought, and I said again last week, I said, I think it's going to go higher. And then it went higher. But because previously, yeah, I said it was going to go higher from here. And I said that was last week, so I was about first as well. I said it about this candle. I said, I think we're going to go higher. We have gone a bit higher. But my point with it is, what is the market driver? Why is dollar weak but yields are rising? Yeah, also there's many reasons for that, but the reason for okay, I can differentiate. So yields would go higher because we are expecting inflation to come in higher going forward. Inflation is like about 3%. Now it's still rising, still hasn't fallen down. Okay, that's the yield part. Why isn't dollar then rising at the same time? Because we are expecting dollar to fall during this time of year because of increased economic activity. People are doing people are buying Christmas gifts. People are there is holidays, so we are increased spending. That would depreciate the dollar because when you're bringing things from America is doing great or activity is doing great, dollar weakens also because the outflow of dollar and because dollar goes out in the world because Americans has increase of money. So instead of using them locally or domestically, they are spending them elsewhere. And also, and the second part of that is that when America does well, you don't get as much return. You get better returns outside of America or outside of the US market. So you would take your money, take it somewhere else, so that you get higher returns for the risk that you're taking. And by the time you come back and when everything starts to go down again, you start buying your dollar again. So it's kind of like if dollar's falling, everything is great, at least generally across the world. So that's why there's a difference. And then why is then a NASDAQ rising when dollar is falling? Because everything is okay. Everything is fine. Everything is great. But if dollar was rising and NASDAQ was rising, or SP500 rising, now that is a bit a different one. Because why would dollar rise when everything is going bad, everything is going worse, but also at the same time S&P going higher? Because the currency market is more reactive to pricing in of rate hikes or higher inflation. The indices doesn't react so fast and so quick on changes to cost of finance or cost of production or reduction in demand. That is more of a data thing, so it has to be shown in the data of individual companies and across sectors before it's really priced into the stock market. So in the currency market, it's more of an expectancy of future rate hikes or future interest rates or future inflation. But my experience with stocks indices as a generality is that it's way less. It's way less predicting. It's more going by the fact of that we have less profits, less people buying, less people spending money. So that's why you have the difference. And then at any given moment, at any given time, as I always say, you have to be going into what drives the market. Okay, and I just saw why is yen pairs going higher now, and I was just about to find my squawk. I saw there was, if anyone in the comments section in chat can do more research on this. Okay, so okay, cool. There's no issue. So there was a 7.2 earthquake near Aomori in Japan. A tsunami advisory has been issued from the northern part of Japan. If that happens, that's going to strengthen Japanese yen for a day or 2 or 3 or 4, and then it's going to weaken. But since they say that there has been no issue, the yen has again weakened, that it wasn't an issue. So just have an eye on that. If there is a tsunami coming into Japan, that might be market moving, and that might be there might be a significant. Okay, so we have a 40 centimeter tsunami so far coming in. Okay, so please be aware of that, people. That could be driving yen higher, and then okay, seems like the market doesn't care about tsunamis today. So yeah, but have an open mind if there is a large tsunamis coming over. We all remember 2011, 11th of March 2011. I don't know how many people died, but it was horrible. So I don't want to see that again. And if that happens, then that's going to strengthen yen, because then they're going to put money back in Japan to start rebuilding and putting money into safety and pulling money from the world and into Japan. So just have a mind of that. So that puts me a bit on the fun of the yen pairs, is that we are going higher. It's running away. It's running away. Why did you get an entry, sir? Me, and another one that I'm angry about is that I wanted the market to go lower before going higher. So I'm left on the station. So now for the yens, I'm waiting for FOMC on Wednesday, and then I'm waiting for market to price in a rate hike, and they haven't done that yet because that's what the market was expecting it to do on 19th of December when they are supposed to have their meeting. Now, the wage growth came out yesterday, slightly higher. That was great. But the other problem to this was that the growth, their GDP out of Japan came out at 0.6, negative 0.6 quarter over quarter, analyzed negative 2.3. So, yeah. So that's not great to have that kind of, that's a double one. So that's 2 quarters at least in negative. So are they going to hike? Well, they have higher inflation. They don't have that much inflation in wage. So it's kind of like we have one thing good, one thing bad. So maybe that makes them not hike. That's where this seems to be the mark where it's going, that we're not going to hike because they can't do it because the data is not supporting it. Hello. So that's just I'm just wandering around, waiting for setups, waiting for things to come down. And I believe dollar strength coming in this week for dollar pairs, that we're going to have a bullish rate cut. So I mentioned that trade idea yesterday out of the weekly planning meeting. Hope everyone attended. And if you don't, you can see the recording if you are inside the VIP Discord group. And I am expecting I need a new lower low, then a pullback. And then I can looking into selling it. So right now, I don't have that. And that's just the patience of trading. So coming back down to 115.17, that'd be great. So until then, I'll just have to wait. I said I was bullish on gold. And then I said that, we are at resistance. Do I buy at resistance? And if I then think it's going to be a bullish rate cut on Wednesday, what if we use this opportunity to send gold lower back down to 4,000? Fantastic, sir. That is kind of what I'm looking for. I'm more of a bigger picture trader. I don't really want to be in kind of small ranges like this at resistance. Of course, it can turn higher, go higher like that. But again, which one's going to be the pullback? Which one is going to lead to that pullback? And if I'm trying to, if I try to force something, I kid you not, every trader that is seeing the flow of my trades is like, okay, let me just trade against this boy because this guy is going to get wrecked. So every time I try to, not every time, but I feel like it. So I'm very picky. Too picky, I would argue, but I'm very picky about my gold trades because, hey, someone's watching me, and it's very fun. They laugh every time to the bank. Every day they laugh as they can laugh. And then I saw that oil was supposed to go higher at least. I can see it falling now, but we had a production slowdown was it Iraq because there was a leakage. So maybe that's also fixed now, but that should have sent oil higher. So, well, that is that. Dollar yen higher. I'm still in it, so I'm like thinking, should I close it? And yeah, I got profit here though at 154.70. So to me, I'm more like, okay, it is what it is. It's okay. I'll survive it. I'll survive it. Because I already got my trades. I already did what I wanted to do. I already did exactly what I was looking for. But I also wanted to go much lower than it did. So it's kind of like somewhere in between of nothing and everywhere. So I got half of what I wanted. and I think that's okay. But I also just had a loss on Euro CAD, which didn't go the way I wanted. But again, adaptability, stubbornness, holding on for dear life for a long time. This probably would just go into my stop loss. The reason why I continued to hold it was I was imagining the market would price in a rate hike in Japan. That is a very valid reason. Then that's just the cost of my trading. And then when they don't rate cut, when they don't rate hike, sorry, when they don't do what I think they're going to do, okay, we pull out and we do a reassessment. Is what I thought is going to be, it's what I thought is correct. Is it going to continue? Yes or no? And then we'll take it from there. So waiting for pullbacks, deeper pullbacks on Aussie, Swiss, Aussie, New Zealand against dollar, yen, or Swiss. Probably yen more than anything else, since I like yen. But today, I don't really have any trade setups. Generally, I would normally trade on Tuesday morning because that's when these trade setups have come to fruition. So please stay alerted for London Open tomorrow. If I do take a trade, I'll probably do that and post it in Discord. And secondly, I do one-to-ones. So if you are in Discord and you want to have touch with me and you want help with your trading, I'm your man. So please go over to my YouTube channel or Discord to get a hold of me, and I'll be very much happy to help you. That's what I love. That's why I'm here. Okay, cool. Love you guys. See you again next week. Boom.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well on this Monday. We are approaching the year's end. It is the 8th of December. Santa Rally is happening a little bit. So if we check out the NASDAQ, we are going higher by a small margin. Unfortunately, it looks like the dollar pairs have started to sell off on the day, which is pretty interesting to see. Is there anything that we should see in the financial juice? Let's take a look. No, not really. Not really. Okay. So yeah, end of the year. Hope you guys are preparing your end of the year reviews. As a trader, you should always be reviewing and improving. Usually I have yearly reviews and I also have quarterly reviews. So every 3 months, I see what I have accomplished and I set a game plan for the next 3 months. And then for the year, of course, I have yearly goals and then I have a review of the yearly goals. But you're not here to hear that. You're here to see the charts. So let's get into the markets. I already made a video on the A1 trading channel, so kind of an update on the markets and everything that you need to know. So if you want, definitely do check it out. The situation has changed a little bit from like 3 or 4 hours ago. Essentially, the dollar seems to actually be gaining some value. So there seems to be a bit of a push to the upside. I have 2 positions in the markets right now. I have a euro dollar buy setup and I have an NZD USD buy setup as well. On my watch list with the 2 trades, I have silver. For silver, we can start with that one for some deeper analysis. For silver, I did some research. I did some analysis. I did some reading, saw what other traders think on silver. And actually, some say that fundamentally silver should not be appreciating and that this move is mostly fueled by speculation, mostly fueled by smaller investors getting in on the hype, getting in on the massive uptrend. Well, what is my stance on it? So in what camp am I in? I'm in the camp of, I actually believe gold and silver, although they have just exploded in value recently. So both gold and silver have absolutely exploded in value. I personally believe that they can go up even more. So they do closely follow inflation. Inflation is already above target. Inflation is already, if we look at the CPI, so US dollar, inflation is already at 3%. So that is definitely above the target inflation rate. You have the Fed that is going to cut interest rates. You have the Fed that's going to cut interest rates not just in December, but also in 2026. New Fed chairman, so Powell is out of the game. You have Fed chair, Polymarkets. The guy who will replace Powell will most likely be Kevin Hassett. So Kevin Hassett will most likely replace Powell. He is supposed to be pretty dovish. I mean, we can do a quick check on that. Let's say ask Gemini. Is Kevin Hassett considered dovish? Let's see. So while that loads, Fed is dovish, and they're most likely going to get even more dovish. Trump was calling for lower interest rates. So essentially, Trump is gaining even more influence on the Fed. The White House is gaining even more influence on the Fed. That is, of course, not the best for the US as an economy, because the Fed was always supposed to be a separate entity, not influenced by anyone but themselves. I mean, they have 12 members for a reason. It's a democratic voting system. 12 members get together and they vote for rate cuts. But what you're getting right now is you're getting Trump's fingers and the fingers of the US administration inside of the Fed. So not so great for the US long term, but short term, bearish for the dollar, bullish for the inflation. I mean, inflation goes up, and bullish for the stock market, which is exactly what Trump and company want. Let's see. So Kevin Hassett, widely considered to be dovish in his views on monetary policy, favors low interest rates, easier credit conditions, and more aggressive monetary easing. Okay, so no wonder that Trump would like Kevin Hassett to replace Powell as the Fed chairman. And because of all of that, the DXY has already lost quite a lot of value. So the DXY has been selling off with quite a lot of momentum, as we can see here, and I expect it to continue doing so. I'm not calling for DXY to 95. I think 95 is too ambitious if you're a dollar short, or if you're a dollar bear, let's say. So I think that is a bit too ambitious, but I think, let's say 98, 90, maybe even 97.5, I think we could reach those levels, maybe overall remain in the range. So overall remain in this sort of flatter price action. That could definitely happen. All of that is bullish silver. If the dollar loses value, that's bullish silver. If inflation goes higher or stays sticky, bullish silver. And generally, the economic conditions that you can see right now, they favor assets. They don't really favor stimulating the GDP. They don't, especially if you look at like the European Union with their policies, with the green policies and all of the woke culture, it doesn't benefit companies. It actually destroys companies, and it definitely puts or let's say transfers money into assets. So instead of increasing the GDP, instead of the money flowing into companies and more jobs and a greater economy, it is flowing into assets. What do I mean by assets? I mean silver, S&P, NASDAQ, gold, Bitcoin, Ethereum, blah, blah, blah. So essentially real estate as well. So real estate definitely. So essentially the things that the people running countries have the most. People on top, they have a bunch of assets and they don't really care about the GDP that much. So they actually prefer the money flowing into assets rather than to see money flowing into companies and increasing the GDP, if that makes sense. There's a great paper on the topic, which I posted in the A1 Trading Discord. That's why I think just the general long-term story is still bullish silver, and I don't think that this is due for a massive pullback. Maybe a little bit of a pullback, maybe a bit of a correction, but I would say this healthy uptrend could last for quite a while. If we do a sort of a brief case study, if we go to the monthly chart, let's say, we can see, or we can try to spot some prior trends. So there was this uptrend, for example, which lasted from here to, let's say, here. So 879 days. That was quite a lot. You had another example here. So look at this uptrend from 2003 to 2008. That's like 4 or 5 years of just straight, or not straight, but mostly extremely bullish price action. And then you have some periods of flat price action, for example, right here or here. So you get some trending periods and you get some flat periods and you get also some really periods with a massive sell-off. And then on silver, what's pretty funny is we have just crushed all-time highs this year. So in the 1980s, silver actually reached all-time highs because there was sort of a manipulation happening in the markets. An investor was trying to corner the silver market and sort of manipulate it, but it ended with a massive crash and he got completely wiped out. I don't exactly recall the story, but there was some manipulation going on with silver. So my point being is the uptrend can last for a pretty long time. And I know it kind of looks like a bubble on the monthly chart. It looks super explosive, but hey, it looks super explosive here. And it continued for a couple of more months. So you never want to call the top with this extremely volatile price action and with these huge uptrends. Where am I buying? So what levels am I looking at to actually buy silver? Well, I don't want to buy right here because I believe, or my trade plan is to get in on pullbacks. So my trade plan is not for hunting the price, for getting in at all-time highs. It is actually to get in close to the 20 MA. So I cannot chase the price, if that makes sense. A good level, in my opinion, would be the 54 mark, somewhere around here. Let's say this level of support, the 54 level. And again, it is around the 20 MA. So I would consider placing a buy limit right there with a tight stop loss, so limited risk, and try to get in on this uptrend. My last attempt on silver was right here, so on the 10th of November. I unfortunately got taken out by just a couple of points before the price exploded higher, but part of the game. So now time for another attempt. Time to create another opportunity in the markets. And then you also may ask, why do you prefer silver over, let's say, gold? Well, I prefer silver over gold because, in my opinion, silver looks a bit more healthy. The price action looks a bit more stable, a bit more high probability. So that's why I prefer silver to gold. just the movements are cleaner. The momentum is nicer, I would say. The blue candles look a bit nicer. And of course, gold right now is consolidating a bit, right? While silver has broken out into all-time highs, right? And I do want to mention the sponsor of today's video. So if you guys are looking to expand your trading capital, if you're looking to start the new year or start 2026 with more capital, I highly recommend you check out DNA Funded. Okay, so DNA Funded is a great prop firm. With our discount code A1Live, so A1Live, you can get 25% off any challenge. So this code is specifically for you guys watching the streams. Usually the discount is 20%. Now it's 25 with the code A1Live. This is my personal 50K funded account, currently running $74 in profit. What is running in profit? Let me see. So euro dollar is running in profit while the SPX is running a loss. So that is interesting. My goal is to get to $300 if I can, and then request a payout. So that is going to be the goal with this account. And this account is purely traded by using trading signals from ChatGPT, which is the most interesting part. So basically every day I go to ChatGPT and I ask ChatGPT, give me a signal on the SPX and on a major currency pair. So then I implement the trade into this DNA account. So if you want to get funded, this is a great prop firm ran by professionals. It's not some kid in a basement. There's a big broker behind this prop firm, which is also nice because you know they're not going to go away in a few months. And you get a very, very competitive price with the code A1Live. So I highly recommend you guys check it out. Oh, the dollar keeps on dropping. Or sorry, the dollar keeps on pumping. Almost like there's some sort of a breaking news, while there really isn't, at least not on a financial juice. So yeah, that's interesting. Let me see what you guys are saying. So hey Sluggy, hey Robohola, hey Marco, hope you're good. What happened with your hedge issues on DNA? I haven't had any hedge issues so far. That was Max. So Max talked about some hedging issues on DNA. I didn't get an email. I never had issues so far. If I will have some issues, I will, of course, make an update. Drop the mixtape already. Slugs and Robo. Hey, Joshua, what's up? Currencies does not move based on rate cuts all the time. Yes, that is correct. So rate cuts don't always move the markets, but they do have a massive impact, I would say, especially because it's all about the relative movement. So it's all about the dollar comparing to other currencies. So if the US is cutting while most other economies are raising interest rates, that means the price should reflect that. Okay, it should definitely reflect the interest rates. So most central banks right now are actually more hawkish than dovish, while the Fed is more dovish than hawkish. You're expecting rate cuts. Well, for example, New Zealand dollar, RBNZ, they have just flipped from, so RBNZ have just flipped from being dovish to being hawkish, while the Fed is dovish. So NZD-USD should go up, right? The DXY measures the strength of the dollar relative to the other currencies. So essentially, if the US is cutting rates while most other central banks are keeping the rates steady or maybe even raising interest rates, and most of them right now are actually hawkish, DXY should go down because it measures the strength of the dollar relative to other economies. But let's say, for example, that every central bank is dovish and that every central bank is cutting interest rates. Well, then you won't really have a lot of movement in the markets. Or if every central bank is hawkish and every central bank is hiking interest rates, then you also won't have a lot of movement in the markets tied to the interest rates. I'm watching CAD Swiss longs, NZD-USD longs, EuroCAD shorts. 2017 was hiking rate year and Fed hiked. 2017 was hiking rate year and Fed hiked 3 times in 2017 alone, but dollar was bearish all year. Not sure what happened in 2017. I wasn't trading in 2017, so I have to do some research on that. But maybe it was a case that although the Fed was hiking interest rates, most of the other economies were also hiking interest rates. So then you don't get a lot of movement based on just interest rates. But right now, what is most important is the current scenario. What is happening right now? And right now, the Fed is dovish, while most other economies are hawkish. 54 on silver, yes. So definitely aiming for the 54 level. Gold right now is doo-doo water gold. I mean, it's not moving a lot. It's stagnating a bit, like it's waiting for something. One more thing that I found on top setups for gold and silver. Okay, we're getting a bullish reading right now. So something has changed, because 3 hours ago when I did a video, the score was neutral. Yeah, on silver, it's still neutral. Gold is bullish, silver is neutral. So I would prefer to see a bullish reading on silver. Okay, I would definitely prefer to see a bullish reading on silver before taking a setup, because I heavily considered the Edgefinder score before taking any single trade in the markets. So I would like to definitely see a bullish reading on silver. If you guys are looking to get the Edgefinder, if you want to join the A1 Discord, you can do so by using my discount code Marco and get a very good price. So all of the links are in the description of the live stream. Let's see. Why is GBP strong despite getting weak data and worst inflation struggles? Well, that is an interesting comment. So let's first check out the short-term data for the UK. 33%, which is pretty bad, I agree. And the inflation, let's see the inflation for the GBP. Coming down a little bit with the last print, but overall definitely elevated. I would say the main reason, two main reasons why GBP USD is pumping higher. First one, dollar weakness. So dollar is losing strength across the map. Okay, across the map, the dollar is losing strength. Actually, you can say 3 reasons. So the dollar is losing strength. Second reason is Fed is dovish, while the Bank of England is hawkish, right? So Fed dovish, Bank of England has become hawkish, as far as my memory serves me. Should make GBP/USD go up. And you had the budget. So you had the UK autumn budget. Yeah, see this autumn budget. People were expecting some really bad data. People were expecting some really bad announcements. The budget turned out to be a nothing burger. So not much came out of the budget. So the move lower never happened. The markets had a sign of a relief, right? So people looked at the autumn budget meeting. They saw that there was nothing crucially broken, let's say, and that there was no major cause for concern. So some confidence went into the GBP. But I would say the main reason is the dollar selling off. And also the Fed being dovish, while the Bank of England is hawkish, has turned hawkish. We can also take a look at, let's say, Bank of England interest rate. So let's take a look. Sorry about that. 5-year, they were cutting. They were definitely cutting 4% now, but I think from their last comments, they started to become a bit hawkish. What did Kids in Basement do to you? That's where most startups started. Well, Prop Firm is a startup, but most prop firms are scams. So 95% of prop firms that you see out there will be gone in 3 to 4 months and are being ran by totally unprofessional people, totally incompetent people, pretty much absolute scammers. People that are very young. So 18, 19, 20-year-olds looking for a quick profit gain, looking to buy a Lambo in 3 to 4 months. Without any morals. So essentially, they're completely fine with scamming people out of hundreds of thousands of dollars and then just not retiring, but running away. So that's why I say kids in a basement. But if you look at statistics, most successful startups were actually done by people that are, I think, 40 years old. So you look at Musk, you look at Steve Jobs, you look at Bill Gates, they were all very young when they started, but they are not the norm. If you look at the actual statistics, most new companies that are successful were created by people who were 40 years old, let's say 35, 40. That's kind of the median. I thought that was pretty interesting. The issue about hedging is once you withdraw, risk team will cancel the hedge profit. Why is GEP strong despite getting weak data and worst inflation struggles? Yeah, so the hedging is a problem if you try to withdraw your profits, basically. Okay, so this is just a spam. What are your thoughts on CAD Swiss longs and Euro CAD? Why is Euro USD falling? Edge return? How much is your return this year since you started trading fundamentals? Thanks, Marco, for the clarification. How much is your return for this year since you started trading fundamentals? So just for my fundamental trades, I think I'm up, 3%, 4% for this year. So not the greatest year, but my investments did pretty well. I have some S&P, I have some Bitcoin, I have some Ethereum. I got in at pretty good levels. And yeah, sometimes you'll have good years, sometimes you'll have bad years. This one was a bit of a slow year for me, but I'm still super happy. Still super happy with my performance. From some other traders I've been following that trade Forex, it's been a tough year. If you're a Forex trader, the volatility in FX has been pretty low. So just one of those years, you have good years, you have bad years, you have break-even years. We just need to go through the bad periods to get to the good ones. Free the kids in the basement. Yeah, free them, and then they can start more prop firms. Just kidding. But CAD Swiss, let's see. CAD Swiss, okay, a pretty nice explosion higher. Now, this is a problem for me because they don't have a clear bias on the Swiss. I haven't been closely watching the Swiss. I can do a little bit of research right now. So let's take a look. Looks to be bullish in the short term. Let's see the GDP. Let's look at some long-term data. Negative unemployment, CHF, 2.9%. Okay, that's okay. I mean, it is a bit elevated compared to, let's say, July 24 or May 24, but it's not so bad, especially relative to other economies. And it's all about the numbers relative to other economies because you're trading currencies against each other. So you're trading countries one against another. Inflation, very low, very, very, very low. Okay, interesting stuff. I'm not sure about the Swiss. CAD, I've just flipped more bullish than bearish. I was a big bear on the CAD. Firm believer in buying USD CAD. I'm not yet ready to buy it. So I'm not yet ready to go long on the CAD. I was very much short on the CAD. I'm not yet ready to flip my positioning. And for the Swiss, I don't have a lot of clarity. I know that there is SMB policy rate press conference Thursday this week. That could be interesting. We could get some forward guidance on that, telling us what they believe will happen in the future. Maybe negative rates. We shall see. Technical analysis just had a breakout higher, so maybe getting in on the uptrend would be an interesting proposition. This is not for me. So this currency pair, I don't have enough clarity. My favorite currency pair is NZD/USD because there was a massive pivot from the RBNZ going from dovish to hawkish, and the Fed becoming very dovish, which is kind of a perfect storm for NZD/USD to continue going higher. EuroCAD. I just don't like the CAD positions, if I'm being honest. We're getting improvement in the data. We definitely are. The last couple of prints have been a bit better, especially the unemployment rate for the CAD. Let me show you. So 6.5%, 6.9, 7.1. So we're coming down on the unemployment rate, but I'm not yet ready to flip bullish on the CAD. I'm not convinced, if that makes sense. So I'm not convinced that this is a good position. One thing that could be good is pound Aussie. Definitely bearish. The Aussie is catching a bid. The pound is gaining some strength as well. So you're not getting the exact polarity that we should get for those trends. Let's check out the Edge Finder top setups. Just let me run these pairs through the Edge Finder. So CAD Swiss, neutral. See, this is an issue. Neutral reading. I prefer, when I'm trading stuff, I prefer to have a clear reading on the Edge Finder. Euro CAD, neutral as well. So the Edge Finder is kind of on the same page as me, where I don't see a massive edge in trading these. While NZD/USD, Rockstar numbers, very bullish reading. I think that is a no-brainer in my opinion. So yeah, that would be about it for me. Joshua says, I've been trading for 4 years now, and every year I come out saying, damn, this year was a crazy year. I agree. There's always something happening, but I think 25 was super, super interesting and crazy, and Trump came in, crashed the markets. I managed to buy the dip on the S&P. That was great. Volatility in Forex was super low. That was kind of boring. But hey, it can all flip. And also gold and silver were exploding higher this year, just putting up rock star numbers. So there were some awesome opportunities in both gold and silver. From year to year, it changes. Sometimes gold will be good. Sometimes the S&P will be good. Sometimes Forex will be good. That's why trading everything can get you some pretty consistent results. So that's it. Thank you guys very much for watching. I will be streaming every day this week. So you can find me on the A1 Trading live stream schedule. Good luck in the markets and see you tomorrow. Goodbye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.